Hey, it's Nolan Mathias, and welcome back to our series on Best Bank in Canada to get a mortgage. This is part 3 of the series, and today we're going to pit our non-bank and bank competitors against each other. That's right, First National versus Scotiabank to see where is the best place in Canada to get a mortgage. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and if you hit that like button, I'm going to tell you about how that first video ruffled some feathers in the industry after we put it out on Facebook in one of the mortgage broker forums. But let's save those juicy details to the end, and let's get into it, and let's talk about bank versus non-bank mortgages. Because really what we're discussing today is not First National versus Scotiabank. What we're discussing is banks versus non-banks in general, and where the best place for you is to get a mortgage. And I'm going to go through the reasons why you should possibly get a mortgage at a bank, and I'm going to go through the reasons why you might want to get a mortgage at a non-bank. And at the end, hopefully you have the information you need to help decide where you should get your mortgage personally. I'm going to link to part 1 and part 2 of this series below. In part 1, we compare the banks to each other. In part 2, we compare the non-banks to each other and try to determine which lender in those categories is the best option for most people. To compare the banks and the non-banks, we use their prepayment privileges in order to determine who the best lender in each of those categories was. Now, we got a little bit of pushback on this because obviously not everybody gets to use their prepayment privileges. But the reason we were using prepayment privileges was because it's kind of an indication in our mind of the greed factor of the bank. So how quickly a lender will let you pay off your mortgage is directly correlated to the minimum amount of interest that they're going to charge you over the life of the mortgage. The greater your prepayment privileges, the less interest they're willing to charge you. Now, everything else on a mortgage, including interest rate, amortization, all those things are basically a commodity, so they're all the same. So when you start looking at mortgages and you start thinking, okay, well, what's different? Prepayment privileges are the only things that are different from one lender to the other. So this created some controversy. Some people are like, oh, you can't use prepayment privileges because most people won't use them. Our experience is actually that a lot of people will use them, but you can't use prepayment privileges because most people aren't going to use them, and that's not a fair way to compare mortgages. Well, if we aren't using that to compare mortgages, if we aren't using how quickly a lender will let you pay off your mortgage, then what else are we going to use to compare lenders? The color of their logos? Like, come on, stupid. So we stand by our comparison on the one thing that is primarily different between different lenders, and that is their prepayment privileges. It's pretty cut and dry in our mind. Now, to remind you why First National and Scotiabank won their respective comparisons, it's because they both have similar prepayment privileges. They both allow you to increase your payments by up to 15% per year. They both allow you to make 15% lump sum payments per year. And they also allow you to do double up payments at any time that you like. Now with First National and Scotiabank, there's one primary difference, and that's with Scotiabank, if you have made advance payments, you can opt to skip a payment in the future. That's a really cool feature. But other than that, their basic mortgages are fairly comparable. Now that's just their basic mortgages, because when you start getting into bank versus non-bank, non-banks do basic mortgages extremely well. But there are some more specialty products that you can only get from a bank, and that may be a reason why you would choose a bank over a non-bank lender. Banks tend to have a broader range of products. They have things like home equity lines of credit that you can get. You can get mortgages that are split up so that maybe you want to go half variable, half fixed. You can get mortgages that are readvanceable. So as you pay your mortgage down, you get a line of credit that grows equal to the amount of principal that you've paid off. These are all great features and all great reasons to choose a bank, especially if you're putting more than 20% down. Banks can also do what's called balance sheet lending. So let's say you're almost at the limits of what you qualify for and you're like 0.2, 0.3% off of being able to qualify for the mortgage that you're applying for. Well, banks can often say, well, because we've got balance sheets, so in other words, because we take deposits and it's our money, we're going to make an exception in this case, and we're going to go a little bit higher and make an exception to what the typical guidelines are. With most non-banks, you won't find that. So a little bit more flexibility if you're kind of reaching towards that limit of what you qualify for. Hey, so just a quick aside here. I know all this product stuff and all this lender stuff can be confusing, and you know what? It's designed to be. But you know what? It's also 2020, heading into 2021, and there's this service called a mortgage broker who is completely free and will take a look at your finances and make sure you're in the right product with the right lender. Like, does it really make sense not to take advantage of a free service? And whether or not you end up getting a mortgage directly through a bank, through a broker, or through a non-bank through a broker, at least if you have that conversation, you know that your bases are covered. Like, it's an absolute no-brainer. So please make sure that you're at least having a conversation with somebody like us at Mortgage 360 or a broker somewhere across the country who can help you make sure that you have the right product and the right lender and the right overall fit. Now, to contrast that, what are some reasons you would want to use a non-bank? Well, if you're getting a fixed rate mortgage, typically the penalties are a little bit lower. If you're getting a variable rate mortgage, often the lock-in rates that you would lock into somewhere down the road are going to be significantly lower. And I think this is the most important piece. Maybe it's because I'm a mortgage broker, but they will often allow a mortgage broker to continue to represent you beyond closing and for the life of that mortgage, which is important because if you don't ever want to have to talk to a bank again, you don't have to. If you want to be able to go and negotiate and have a little bit more negotiating power because they're talking to your broker instead of you, and there's a degree of separation between you and that lender, then that's a good thing as well. And if you want to make a change to something, you just call up your broker, you say, hey, I want to make this change, and they spend the time on the phone or emailing with the lender that you deal with, and it ends up saving you a ton of time. And here's what we find is the people that should deal with the bank are often the self-employed, the people who, maybe want to pay off their mortgage a little bit faster, but also want to have the ability to pull back those funds in a line of credit if they need it, or people who generally just want to have a line of credit available to them. Those are bank clients. First-time home buyers, people who just need a basic mortgage, often end up being better clients for non-bank. And in my mind, there's no reason to try to convince somebody to go to a bank or go to a non-bank. It's purely which one makes the most sense for you. And the way that we determine which one makes the most sense for you is to ask you questions. Do you ever see needing to be able to pull back this money? Do you ever see needing to be able to skip a payment? Do you see ever needing a line of credit? Okay, any of those things are true, then yes, you're a bank client. None of them are true? Well, let's see if we can get you a lower rate and get you a better deal somewhere else. Now, it's interesting. We created a little bit of controversy with part one of this video, the best bank in Canada to get a mortgage. We got absolutely attacked before a few people even watched the video. They naturally assumed that TD and Scotiabank were going to be the best lenders because those are two that deal in the broker channel. Because I'm a mortgage broker, they assumed I'm going to pick the two lenders that deal in the broker channel, which kind of makes sense, but I can assure you that that is anything but what I did. Being the first B Corp certified mortgage company in North America, having that certification around accountability, transparency, being honest and being fair, that's hugely important to us. So I wouldn't go out there and pick lenders as the best bank in Canada to get a mortgage based on, who I can deal with. I picked them because they literally have the best product. When you think about the fact that TD and Scotia deal in the broker channel, and they're the two lenders that allow you to pay off your mortgage the fastest and ultimately pay the least amount of interest over time, well, is it any coincidence that those lenders that have the most flexibility and have the least greed when it comes to the prepayment privileges are also the lenders that are willing to allow a client to have independent representation from a mortgage broker so that they can get good advice and have all of their options looked at? I don't think that's a coincidence. I think if you've got the best product in the industry, you want as many people selling it as possible. That's why you deal with brokers. And if you don't have the best product in the industry, of course you don't want to deal with mortgage brokers. You don't want to have them comparing your product to somebody else's product because you're going to lose every single time. It shouldn't be a surprise that the lenders with the best products, the banks with the best products, deal with mortgage brokers. Because if you had the best products in the industry, wouldn't you want more people selling it? Think of it this way. A lender who is willing to let you pay less interest and get out of debt faster is probably going to allow you to get a second opinion. And that's why Scotiabank and TD won the Best Bank in Canada contest. It's because at the end of the day, they're the ones that consistently look for the win-win solution. And to them, having brokers sell their mortgages is a win-win because their mortgages can compete with all the other lenders in the industry. Now, to round this out and conclude this conversation about the best bank in Canada or non-bank in Canada to get a mortgage, let's make it clear. Here's what matters when you're getting your mortgage. One is that you have flexibility. Two is that you're comfortable with who you're dealing with. And three is that it's the right mortgage for you. That's all that matters. Get the right mortgage for you. Whether you're dealing with a bank or you're dealing with a non-bank, get the mortgage that makes the most sense for your personal circumstance. And if you need help with that, the comment section below is always open, and so is mortgage360.ca. Cheers.